Good evening, everyone. Welcome to our live stream. Back in 22, we had the pleasure to host our next guest. Yes, it was a pioneer in the field of cryptocurrency data analytics, the Thai. He's the CEO of the Thai, for sure. Today we have Joshua Frank in our middle, and the leading host will be Jerome from Kirok, and he will be represent as the business developer from Kirok. Hi, Joshua. How are you?
I'm doing well. This is all new. Last time I was on, we were on Zoom with a bunch of people. You got a giant intro. I thought the market was down. I walk in and I'm all hyped up with this big intro video you got. So thanks.
Yeah, I do my best. My English is not that good, but
your hype videos are. Your English is perfectly fine. I think you don't give yourself enough credit, and your English was also good the last time we did these again.
Okay, thank you, Josh.
I appreciate you.
Today I have Jerome with me, and he will lead the host, the process or the community call, because he has a lot of knowledge of data analytics and that kind of stuff. He's very busy in the space, and because of that, I think this is the right person to lead this community call.
Thanks for having me on, Tim.
No problem. Nice to have you here.
Cool. I mean, let's kick it off then. So yeah, hi Joshua, nice to meet. I'm very happy that we had the chance to talk a little bit already. But I'm looking forward to get to know you better and get to know the Thai better. So maybe like it would be cool to get a small intro on your side. Intro yourself, the Thai, the company. What are you doing? What's the mission, the vision of the Thai, and we'll take it from there.
Sure. Yeah. I mean, my background isn't the most exciting thing in the entire world, but you know, from New York, grew up between New York and Hong Kong, went to McGill University in Montreal for school, graduated from McGill, took a really boring job working, in post-trade settlement technology, which is, significantly more boring than it sounds. So naturally, 2016, 2017 roll around, and shit coins are going to the absolute moon. And so, naturally, when I was going on my lunch breaks, I was on my phone trading absolute garbage coins based off of what, John McAfee and a bunch of other influencers were kind of tweeting about. And this was kind of, the time when, a bunch of these guys would put out a tweet about like absolute garbage. Like, I don't even remember John McAfee got a tattoo of some shit coin on his back. Like, this was like peak garbage. This is when DentaCoin went to 2 billion market cap. This is like, the kind of in the midst of all of this. And I was just sitting at my desk, super bored. And I'm like, fuck, I got to build something in this space. Like, I got to figure out why these things are moving. And if I could figure out why these things are moving, I can make money. And so that kind of was the impetus for starting the Thai. Started the company. It was actually just me with about 100 grand, which is, what I could kind of pull together. We're now about 100 people. So we've come a very long way from where we were, in 2017. I started the company December 2017. What we do today is actually 3 separate things. But at our core, the core problem that we seek to solve is if you go and you speak to an institution, and by institution, I mean primarily bank, asset manager, hedge fund, OTC desk, market maker, VC, and you ask them, how are you staying on top of crypto from an information perspective? What they'll do is they'll show you their browser and they have 30 or 40 different tabs open. And what we really try to do is consolidate, all that information into a single trustworthy and reliable platform. And so today we service a couple hundred of the largest institutions in the world. I think, the market that we service more than anybody else is really on the TradFi side. We have, multiple top 5 banks, multiple top 10 asset managers, a large number of the top 100 hedge funds by AUM, as well as a large number of, I would say, larger crypto institutions. We don't really work with the smaller institutions in the space. And our average client, which is pretty cool, spends about 3 hours a day on our platform. So it's really the principal way in which they're engaging or interacting with digital asset markets. So that's really what we do at our core, is serve, provide a platform for institutions to stay on top of the market. We also do a couple other things. We sell them APIs. We also do a lot of data redistribution. So I know, a lot of the folks that are on this call, maybe you guys are individual investors and you're not institutions. We also license data to a number of platforms. So if you've ever used Bybit or BitMEX or Interactive Brokers or any of those different platforms, and you've seen news feeds or on-chain data or sentiment data, chances are that comes from us behind the scenes. So we do a lot of licensing into those platforms. Generally, it's white labeled, so you wouldn't know it's us, but it is us behind the scenes. And then we work a lot with token foundations, and we're focused on kind of what you would call investor relations in traditional capital market speak, which is really, hey, we have all these large institutions, the tokens, and I think, Jerome, I think you would know this, given that you engage with them, they don't really understand anything from market making to speaking to institutions. They couldn't tell you what the difference between a hedge fund and an asset manager was. And so we're doing a lot around really trying to educate the tokens on the institutional landscape and really focused on bridging connectivity between the institutions, especially on the TradFi side, and the tokens. And that's in a few different ways, like exposing their data to institutions. We're actually working, we partnered with Avalanche. We now have a public website, avalanche.thetide.io, that anybody can get on to see data on Avalanche. We've actually integrated a bunch of the Tides data into Avalanche's wallet. So anybody looking at, anybody who goes to Core downloads Avalanche's wallet will see data on the number of transactions, specific, assets, DeFi projects, things like that. We're licensing that. So really trying to, everywhere we can, expose that data to the public and to institutions as well. So it's a lot of different things, but all around information, data.
It's like a layer one in the companies.
Yeah, I don't know if that's the right terminology, but it's. I think we're trying to build a company and not a product. I think there's a lot of companies in crypto that are just products. And, crypto is a very small market. And if you're just doing one product, chances are you're not at that much scale unless you have a monopoly like Chainalysis.
I mean, no, it's super interesting. I actually didn't know you guys were that big, but it's super interesting to hear. And I often read the news feeds on Bybit or whatever, so now I know it's you behind the scenes.
And look, we're because we don't service. The difference between us and a lot of the other data companies is they also service individual users. We don't have any business with individuals at all. We have 0 individual clients, which means that we're just naturally not going to have as much of a public facing presence as I think others in this.
Makes sense. Yeah.
How old is it now?
I started the company December 2017, so coming up on 6 years. So
okay, nice.
What has been the biggest challenge so far for the Thai?
Infinity challenges. It is full of challenges. It depends what day. I mean, today I had challenges. I had different challenges yesterday. It took me 3 years to make my first dollar. 3 years. I started the company at the height of the bull market in December 2017. Obviously, didn't have a product we didn't roll out our first product till August 2018. Came into the beginning of a really bad bear market. I started the company when I was 22. I'm 28 now. And it's hard to build trust when you're 22. I also didn't really know what I was doing. I still don't think I know what I'm doing, but I definitely a lot more didn't know what I was doing 6 years ago. And so, that was a huge challenge. Getting your first customer in the door is an incredibly difficult thing. We actually got our first contract ever in March 2020 when Bitcoin crashed to $3,700. It was a couple of days before that. We got not only our first contract, but our first 3 contracts in the same week, which is really funny. And so that was a huge challenge getting there. And then, we actually got from that to our first $1 million really quickly, to our first $5 million really quickly. But then trying to get from being a real business to being a really big growth stage business is its own set of challenges. And it's a really big challenge to do that in a crypto market. And we spoke about this before the call starts, where institutions really don't have any money, right? Our core product is serving institutions. And the way to think about it, I know you guys heard this before, but the audience didn't, right? Back in 2021, a lot of these crypto funds, maybe they started with $10 million or $20 million that they raised. Maybe they grew that to $50 million, right? And the way that hedge funds get paid is they get paid on 2 and 20. That means they get a 2% management fee. So if they have $100 million, they get paid $2 million a year, and they get a 20% performance fee. So if they took 10 million, they turned it into 50, they're getting paid $8 million on that performance. Problem is, once you hit the 50, you need to go above that again to get paid a performance fee. The challenge is a lot of those guys have gotten really hit from their positions. They're now at like 20 million in AUM. And so these guys have no performance fee because they're below the 50, right? And their management fee is just 2% of 20 million, right? That's just $400,000 a year. If you think about that, if you're a company with 2 employees, like you and one other person, if you're paying any reasonable salary in the US or in another country like that, you're already at a couple hundred, $300,000. Plus you got to pay health insurance, maybe. Plus you have to pay your legal fees. Plus you probably want to pay for custody. There's really not that much money. And so, I think one of the biggest challenges for us has been the market is consolidating, right? And it's basically the pie was too small before, and now the pie is even smaller. And I think it's not just a challenge for us, it's a challenge for the entire industry. We have to figure out how to grow that pie, right? And I think regulation is certainly not doing us any favors, especially in the US. And as an American, I do not take credit for this, have nothing to do with supporting this, any of this policy that's happening.
Would you feel like regulation is the biggest challenge in crypto then so far? Or
no, I think the biggest challenge in crypto is our own industry stupidity. I think regulation is second.
That's fair.
There's so many mistakes and stupid things that we've done. I mean,
yeah, it's true.
Sam Bankman-Fried set us back so many years, because not only was he a jackass in that he took customer deposits and traded them, but he also paraded himself around as the savior of crypto. He went and spoke to regulators. I mean, Gensler's embarrassed because he was buddy with Other politicians are embarrassed, right? And it's not just Sam, though. I mean, we've seen so many instances of grifters and people coming into the space, in 2017 and 2018. Look, I could have launched a token and made a ton of money. I didn't. I tried to build a real business, right? And I think there's lots of people that came into this space trying to make a quick buck, and lots of people who have been scammed. There have been rug pulls. There have been hacks. There have been all sorts of stuff. There have been exchanges not acting in the best interest of their users, right? And I think, look, that's partly what's brought this regulatory scrutiny, right? And so I think it's us shooting ourselves. And look, every industry has this bullshit, right? I just think we've had a disproportional amount of it, but hopefully that clears itself up in the next few years. But I think if SBF didn't end up taking user deposits and trading with them, we would be in a totally different situation than we're in.
Yeah. I totally agree.
Also in the regulation, you think?
Oh, I think the regulators, because the regulators that are going after crypto were friends with Sam, and he embarrassed them, right? They didn't catch that, right? Your goal the goal of the SEC is to protect retail investors. Not only did they not protect retail investors, they were buddies with the people that were fucking retail investors. So it's like, it's the worst of, and look, I think there are separate motivations and they're not doing the right thing. But I think, look, regulation is a huge problem. I think regulation is needed in some areas, right? We need to clean up the mess. We need to make sure that there are exchanges that are not market making against their clients, that are not taking customer deposits and trading with them, right? There are things that need to get cleaned up. But I think what's happened is, instead of taking a proactive stance the problem is the regulators didn't stop any of this from happening. And now they're kind of clawing back on stuff that happened in the past and trying to overcorrect the problem and getting way too aggressive, right? And I think that's the challenge that's happened, right? Is, now they're kind of embarrassed. They got caught with their pants down, and they're just they're swinging way too far to the other side.
Do you think the whole regulatory part of crypto will increase institutional adoption, or first decrease and then increase for institutional adoption?
It depends. I mean, look, if the SEC continues to say that everything is a security, how is it going to be traded? It's impossible to be traded. And the reason being is that a security needs to give disclosures, right? And if cryptos are actually decentralized, which we all know some of them are kind of decentralized. You guys work with tokens. They're not all that decentralized. But if cryptos are truly decentralized, they can't give disclosures. And the problem is, not only can they not just give disclosures, they can't register. So the SEC is saying everything's a security, but they're not actually giving a path to registration. So it's impossible to trade the asset. So I think it's a problem, right? I think in the long run, though, meaningful, thoughtful regulation, like I think the FCA in the UK is trying to do, like I know you guys are under MiCA, like, the EU is trying to do with MiCA, like Hong Kong is trying to introduce, will further institutional adoption. So I think good regulation is a great thing for institutional adoption. Because at the end of the day, right, if you're an institution, right, and you're trying to come into crypto, what are the things that you need, right? You need to have really trustworthy custody. You want to make sure that you have a place to store your money. You want to make sure that, there's no reputational risk associated with doing, operating in the space, and having positive regulatory framework and real market participants to do business with is a good thing. You want to make sure that you have proper risk management in place, right? I mean, one of the biggest challenges, one of the reasons that institutions haven't come in mass is, they see every single week something gets hacked, something gets stolen, an exchange goes down, there's this regulatory action, that regulatory action. If we have, look, institutions are trading on the CME, they trust the CME, it's regulated, there's not any illicit activity that we know of at least happening on the CME, right? We need that in place, right? So all of these, and there's more things, there's more things than that, but we need to be able to manage our risk. We need a place to put our money, and we need liquidity, right? I mean, liquidity is the biggest thing, right? If I'm a $50 billion hedge fund and I can only trade $15 million, I don't really care. It's not enough money to move the needle for my fund, right? I got to figure out, how do I deploy $1 billion or $2 or $3 or $4 billion?
Okay.
Yeah.
But
Exactly.
another question I have, because of the regulation, do you think the innovation will hold back and that China gets a first mover advantage? What do you think?
I don't think so. I think the thing that's going to hold back innovation is lack of capital raising, right? So
liquidity.
Right now, look, innovation will still happen if firms continue to get funded. But if they don't continue to get funded, innovation will pause.
Yeah.
The one thing that people are forgetting is there's still a lot of capital that was raised by crypto VC funds. And I'm sure you see that, right? And also a lot of these token treasuries have a lot of capital as well, right? Andreessen Horowitz raised $4 billion for crypto. You know how hard it is to deploy and spend $4 billion? It's a lot of money, especially in a relatively small industry, right? I mean, if you think about it, the overall market cap of crypto is $1 trillion. Take Bitcoin out of that, and now it's $500 billion. Take stable coins out of it, and now it's $300 or $400 billion. Take all the shit coins that the market caps are kind of fake, not really illiquid. But you're talking, the token market is a few $100 billion. It's tiny. I mean, Apple's a $3 billion company, right? Like, the entire crypto market is small, and there's not that many companies that are making 5, 10, 20, $30 million in revenue. So it's a relatively small pool of companies that are legitimate that capital can get deployed to, right? Katie Haun left Andreessen. She raised $1 billion. That money needs to get spent. Guys like Dragonfly still have hundreds of millions of dollars in cash, right? Guys like, they're just firms that still have capital, that raise capital. That capital is get deployed. So no, go for it.
No, of course, there's still a lot of capital on the sideline. I mean, like recently, like a year ago, there was like an article out there that said that there has never been that much capital on the sideline, like VC capital, like now. However, I mean, and to get back on your point of the whole VC stuff and A16Z throwing money at these startups like at crazy valuations, I agree. But then again, there's like a term sheet attached to it as well, And there's a liquidation preference, And
my point isn't whether or not they should throw around money, but my point is just, if there continues to be money that can be invested, we can continue this innovation. The challenge is, if allocators that are giving money to these VCs get scared because of regulation, which will happen, that's going to stop, right?
Okay,
and if they can't, like there's a news story today that came out that Tiger was raising for a $6 billion fund. They've only closed $2 billion. Tiger had no problem raising $6 billion, $10 billion funds last year, right? And that's just not just crypto. That's kind of across the board. I think the problem is exacerbated in crypto. Like, if you speak to these VC funds, right, where they're not raising money from anybody in the US. There are a couple like endowments and pensions in the US. There's a few that are still giving money to VC funds, but a very small number, right? And so there's not a lot of family offices are scared of crypto in the US. A lot of high net worth individuals are scared of allocating to crypto. And that's partly because of all the hacks and partly because of the regulation. If that happens, yes, the innovation moves offshore, and it moves offshore to places that have the capability to raise capital. I think one thing that's really cool that's not really public is the Hong Kong government has actually set up a sovereign wealth fund, which not a lot of people know about. It's about a $6 billion fund with about 50% of that going to fintech. So the Hong Kong government is going to start trying to seed crypto VC funds to encourage the development of crypto in that region. And if we look at what happened in the bull market, a lot of the capital came from Asian-based sovereign wealth funds. We know who they are. There's two of them in the same country, right? They really deployed a ton of capital into a lot of these VC funds that kind of took off, but then they got embarrassed because they were investors in FTX, and then they kind of pulled back and stopped, right? And so, we need it really comes down to where the capital is coming from, because I think the startups will chase the capital.
Yeah. No, I totally agree.
And what do you think of BlackRock's this move?
It's a big fucking deal. Anybody who says it's not a big deal is totally wrong.
Yeah, I mean, but you have the regulation now, and they move in the landscape of uncertainty. And why do they do it in a bear market like this?
So I think there's a few things, right? I think there's a few things. The first is BlackRock has been in crypto for a long time and no one knows. BlackRock has 100 people full-time on crypto. It is a real team. It's not just this. BlackRock has a platform called Aladdin, which is the leading, portfolio management software that's used by, they have 115 clients, 130 clients that use it. They represent $20+ trillion in AUM. Their clients are not $50 billion hedge funds. It's multi-trillion-dollar asset managers that use Aladdin. BlackRock has been trading Bitcoin internally through Coinbase on Aladdin. They're rolling out Bitcoin buying and selling to all Aladdin customers, which has been announced. I'm not disclosing it to public. That's a huge deal. In addition to that, they're also rolling out an ETF, right? And that's a really big deal because BlackRock has the iShares brand. Every financial advisor in the world, or at least in the US and other countries, knows about iShares, has offered iShares products. BlackRock has submitted 600 something applications for ETFs. One time out of all those times they weren't approved. I think they know what they're doing. I think they first of all, I mean, during the financial crisis, BlackRock literally managed the US government's money. I mean, the US government managed. Like, I don't think people realize BlackRock has incredible amount of pull on the US government broadly. And the fact that they feel confident enough to roll out a Bitcoin ETF says a lot. And I don't think BlackRock gets challenged often. And I wouldn't be surprised if Gensler does try to challenge them, right? But the fact that, look, they take this asset seriously, maybe not the asset class, but they certainly take Bitcoin seriously.
Yeah.
It's a great thing. And look, if a Bitcoin ETF does get approved and it's available through iShares, look, if every financial advisor, or if 20% of financial advisors told clients to put 1% of their assets into Bitcoin, you're getting 0.2% of US retirement funds into Bitcoin. That's a gigantic amount of money, like an unbelievably large amount of money, with a small number of financial advisors having a small percentage of their clients put a small percentage of their net worth into crypto, right? And so and keep in mind, that's not shorting, they're buying and they're holding, right? And so that's an up only thing. I think this is only a positive thing for crypto. I think any interpretation of it in negative is just the wrong interpretation.
Will it be a spot ETF or futures? What do you think?
Spot. They're probably spot. Yeah.
Okay.
Yeah, that's gonna be exciting. We've been waiting way too long for this.
Yeah, indeed.
But yeah. Okay, cool. I mean, super interested to hear about everything you research at the TAI, and I would like to know actually, like, how can an institution like, for example, Kirok, a market making firm as us, benefit from a service as the TAI's? Like, what kind of? Are
you guys principal or agency?
Both, often.
Okay, so yeah, so it really depends on the client. It depends on what they're doing, right? So for a market maker or OTC desk, right? There's a bunch of different things. One of the things that we provide to market makers, which I think the audience is going to be very confused by, is things like technical exchange updates. So if an exchange changes the number of decimal points in their API, if they delist a new asset in real time, we'll notify you of that. We'll notify you of any scheduled downtime or uptime. Sounds super not exciting, but a market maker is excited about that. Yeah. We probably have we definitely have the best news product in the market. So one of the things that we've built, and we've been building this for 5 years, is we have technology that goes out to 5,000 plus news sources. And by news, I don't just mean CoinDesk and Cointelegraph. I mean, we pull every SEC filing, every court case, every regulatory ruling in hundreds of different jurisdictions in real time, every update from tokens, exchanges, you name it. And what our technology does is it's able to tag and categorize that information. And the reason that's important is, imagine you have a news story that mentions Avalanche. The Colorado Avalanche is a hockey team. You don't want to be tagging a news story about the Colorado Avalanche being around Avalanche. You don't want to tag a news event. Avalanche can also be a weather event, like on a snow mountain, right? You don't want to tag something about that as being about Avalanche. And we have the ability to tag things as specific events. So in real time, we can deliver you a feed of, for example, hey, I want to know of every single court filing in the Ripple case in real time. I want to know about every single regulatory ruling from the SEC that mentions a crypto company or the FCA in real time. I want to know every time Solana goes down in real time. And that's to help you manage your risk, right? So it's not even about trade identification. It's also risk management. One of the things that we also have, which is pretty cool though for OTC desks, is within our application, we now have a messenger where you can go and you can message with other, there's obviously a number of liquidity providers like OTC desks and market makers on there, but there's a huge number of takers on the platform as well, which are hedge funds, token foundations, venture capital firms, asset managers, you name it. And we've built a platform where you can basically transact, you can not transact, you can interact in a compliant way. So, one of the biggest problems with large institutions that want to come into crypto is they're not able to use Telegram because their compliance systems are not okay with it.
It's actually a problem that we're having today. We're getting impersonated on Telegram.
So we've built an application where you're basically verified by email address. We have full SOC compliance. We can connect directly to your compliance systems, give you full chat logs, audit history, who you're interacting with. And we have even top 5, top 10 banks in the US on it that obviously would not be able to be on Telegram. So you can connect and you can interact. I think there's a lot of stuff, right? I mean, there's infinity stuff. I mean, another thing which we just rolled out, I'll give you one more thing, which is super cool. We just rolled out, we now have a tracker for multiple thousand hedge funds and venture capital firms in crypto. We're tracking how much funds they've raised in real time. So we have a real-time tracker where you can see the last time somebody's raised capital, how much capital they've raised, what they've invested in, how many investments they have, their head count, their news, all sorts of things. And you can go message them. So you can see, okay, I'll use an example. Dragonfly was on our announcement for Messenger, so they're using it. Okay. So I'll give you an example. You can see Dragonfly has raised X number of hundreds of millions of dollars. Here's everything that Dragonfly is invested in. By the way, you want to go chat with, a partner at Dragonfly, click the button and chat and connect with them directly. So that's just another example of, and there's infinite things we do. That's about 5% of the platform.
Joshua, quick question. Are you in the possibility to show us some features from the platform, or is that not possible anymore?
I could show you guys a couple of small, we don't really show things publicly, but I can show you.
A little bit.
Sneak peek.
Because I'm a big fan of it.
I could show you, for example, I'll show you a couple examples of things that I think are pretty cool. So
good. Thank you. Thanks a lot.
Because
I think Jerome gonna like it.
Yeah.
So this is the Tide terminal. I'm going to go very quick, high level overview, but the idea, I'm going to show you our dashboard, which is the idea that in a single screen, you can look at the entire market, right? So here I have a news feed, which I've actually linked to a screener. So if I click on Ethereum, I can see, all the news on Ethereum or Tether or BNB. I can see the, top performing sectors. I can see macro futures. I can see the top trending news stories. I can see upcoming crypto events. I can see stablecoin borrow rates versus treasury rates. I can see the hottest smart contracts on ETH. I can see every single upcoming token unlock. And I could say, show me any unlock in the next 30 days that's equal to 1% of an asset's market cap. I can show you developer data. I can show you open interest versus liquidations. I can show you lending market rates on chain. I can show you staking reward weights. I can show you CME data, all within. I can show you, I can go and I could say, which assets are most correlated to Bitcoin. I could show you, technical market updates. This is a fraction of what we have. We have hundreds and hundreds and hundreds of different components where you can go in and you can, just on the derivative side, we have 50 different components. If you want to look at, option market butterflies or perp funding rates or anything else, you can really, our goal is really to aggregate the entire market into a single screen for institutions. So that's like the quickest sneak peek of, some of the things.
Yeah.
It's super interesting.
I had the demo of your platform, Joshua, and it was like an hour, everything. It was crazy. You need a guide for that.
Our clients use about 3 to 5% of what we have on the platform.
I think also.
I can imagine.
Somebody who uses Bloomberg or FactSet or any of the traditional market, you're not going to use the entire platform. You use a fraction of the offering. And so we service a large number of different clients. Like we have BD teams at at OTC desks that want to connect with institutions and chat with them and identify new funds that pop up so they can trade with them, right? That's a use case, right? We have.
Is there like an RFQ system where you can plug in and then you have like, okay.
We're super petrified of trading because of the US regulators right now.
Yeah, of course,
so,
so no block trades, no RFQs.
At some point, we plan to offer RFQs. We do not plan to do that until there is a new SEC commissioner in place.
Yeah,
once there's clarity, we will evolve more into that. But for now, it's just not worth the risk for us.
Yeah, no, I get it. No, makes sense.
Waiting till Gary gets
loose.
Yeah. Okay, nice.
Awesome. Cool. Okay, so you have all this data, you have all these dashboards, you have all these, cool stuff. What is like the maybe I wouldn't say the coolest one, but the one where you got most value of and like some cool insight that you got out of these dashboards? I mean, I would say your most favorite whatever like tool that you're using
as an investor.
I think there's a bunch of different things. It depends again on the use case. I think one of my favorite things that we've built is our token unlock data. So the problem with existing, and I'll just show it. The problem with existing token unlock data is that data is just often inaccurate, right?
Yeah.
And so what we do, which no one else does, is we'll start by speaking with the team and looking at we'll start by looking at the white paper. What we'll then do is we'll speak with the team and we'll clarify things. We'll look at any fundraisers, but what we do, which no one else in the market does, is we actually will track the vesting contracts on chain and make sure that what the team told us actually matches what we see on chain. And in many cases, that's not the same. For example, the example I give a lot is teams will often say that they have monthly vesting, but the problem with that is that the smart contract says every 30 days. And those are two different things. Like monthly means Jan 1, Feb 1, March 1, right? Which means that in the first month, you have Jan 1, Jan 31, you have 2 vests. Whereas every 30 days, that doesn't mean the same thing, right? So 30 times 12, you have 12 months in a year times 30 days is 360 on a 4-year vest, right? You could be 20 days off from when you think the actual unlock is going to happen if you go based off of the dates the team has said, which are wrong. And so we've built what we think is the most accurate token unlock tool on the market. And you could say like, show me, every unlock in the next 6 months that meet, different criteria. I only want to see when, for example, investors are unlocking out of their tokens. And I only want to see like very significant unlocks. And I mean, I'm not obviously giving away all of the secret sauce, but there is, so much more. Like you can see, next week, 1 inch is unlocking out of $42 million, which is equivalent of 140% of their daily trading volume and 16% of their market cap on the same day, right? So lots of, opportunities you can generate out of stuff like that. So that's one example. And I'm happy to give more if relevant. But
I saw also that you have a whale management tool, a whale spotting tool. Is that
we also do a lot of. I wouldn't describe it as just whales. I think a lot of people in crypto are focused on tracking movement of specific wallets. What I'm particularly interested in is insider trading. I want to know if the founder of, take for example, 1 inch sold out of 20% of his tokens. I want to know that. He probably knows something that I don't know, or he probably doesn't have faith in his project. And so we're doing a lot of trying to detect, like, this is a team member at a foundation, or this is a really early holder, or this is somebody who's really knowledgeable. I think whale is a misnomer, because a whale could just be somebody who doesn't know much that bought $20 million worth of tokens. I want somebody who's got insider information in that token. I want to know if they're buying, I want to know that too, right? And so a lot of what we're trying to do is track, what I would define as broadly insider trading within crypto as well.
Okay, nice.
Yeah, that's super interesting. I mean, if you look at Ethereum Foundation, and if you just like spot their market activity, you've done well for yourself.
The Ethereum Foundation selling at the top. They're fantastic at selling at the top.
It's awesome. It's awesome. It's just,
they're the best. Meanwhile, we have so many professional traders in crypto, and Vitalik is the best one.
Yeah,
traded their entire life, and Vitalik outtrades all of them.
It's crazy. So
The
crazy.
best trader in crypto is Charlie Lee, the founder of Litecoin, who sold all of his Litecoin in 2017, and it's never come back to the number it was at when he sold all of it. All of it. He sold all of it.
That's a nice hint.
Yeah.
Okay.
Wow. Awesome. What are you? I mean, we've talked about these bigger foundations now. What do you believe is their role within the crypto industry, and mostly maybe like financial institutions? What would their role be? And because it's not just speculation, right? I mean, it's a little bit more than that, no?
Sorry, can you repeat the question?
So we've talked about these foundations now. Like we joked about Ethereum Foundation selling at the top and Litecoin or whatever. But I'm happy on. I wanted to learn more about your opinion on like what's their real role within the broader crypto ecosystem, and also like not only like from the crypto native side, but also like these financial institutions. They're not just speculating and trying to guess number goes up and I want some exposure.
I mean, I think there's so many. You're mixing a lot of stuff. So let's start with the foundation. So what are the foundations? So, a foundation is generally a nonprofit organization that's set up. And honestly, the structure of how sometimes it's the company that has all the money. Sometimes it's the foundation. Sometimes it's 17 foundations. Like Cosmos is like an absolute, it's like a web of organizations in the Cosmos. Like just depends, right? But generally the idea is to promote the token and to promote the growth and the health of the ecosystem, right? So the way that the foundation should ideally work is they should efficiently spend capital to grow out and grow the ecosystem, right? And that means to attract developers to build projects. It means to, provide grants for services that will help the token grow. And there are some foundations that I think have done a really good job at doing that, at supporting their ecosystem and at seeing that ecosystem grow. You take, for example, Polygon and Avalanche. Obviously, they're, some of these organizations have spent more money than they otherwise should have, but they've done a good job at attracting ecosystem projects, developers, institutions to building products on those ecosystems. I think the goal, though, of these organizations is really to grow the use case of the token, and hopefully over time, as a token holder, you accrue some value because of that. In terms of what are financial institutions doing in crypto, that is a very loaded question because it depends what financial institution you're talking about, right? I think let's start with banks, and we can go down all of the different institutions. Let's start with banks. It depends on the bank. I'm about to go in after this meeting to one of the largest banks, downtown in New York City, and they're offering buying and selling of Bitcoin through the CME. They're actually offering loans against Bitcoin and Ethereum now that are over collateralized, and they would like to roll out a full prime brokerage offering. They're a large traditional prime broker. They'd love to offer a full prime brokerage offering for crypto. You had today Deutsche Bank, which has been being worked on for a while. They're already an investor and a custodian, announced that they want to be custodying crypto. You have Boney Mellon and State Street. Boney Mellon is the world's largest custodian. State Street is number 2. They're ready to custody crypto, and Boney Mellon custodies, 10 trillion of the world's assets. Right. And they're lining up. So I think, there's the crypto part, but there's also the tokenization part, right? A lot of these banks have some internal tokenization efforts. Generally, the goal of these efforts is to save money. So in some cases, they're on chain, on a public chain. In a lot of cases, they seem to be on private chains. But the goal is, hey, there are a lot of things that we do around sending money or sending securities or anything else that, rely upon a large number of, rely upon a large number of transactions that are very, they take a long time, that are very expensive, and they would like to see whether tokenizing or moving to doing those transactions saves them money. So that's banks. You have asset managers. BlackRock is an example of an asset manager. What are they doing? Well, they want to make money offering buying and selling of Bitcoin. They want to make money offering ETFs and structured products and potentially even funds around crypto as well. But there's also tokenization efforts that these asset managers are pursuing. You have hedge funds. What do hedge funds want to do? Hedge funds want to trade and make money. They don't care if the price goes up or down. They just care that there's a lot of volume, a lot of liquidity. They hope Key Rock trades more and provides more, market making so that they can be the taker on some cases, or in some cases, they're making markets as well. You have VCs that are speculating and they're long-term bullish on the space, right? So, you have asset allocators, which are your endowments and your pensions. And, what they're trying to do is take the money that they've been given and allocate it to, a diverse array of hedge funds and market makers and VC firms to grow the net worth for firefighters in Ohio, or for, depending on, who the end constituent that's capital is. So it really kind of depends.
Yeah, exactly. Did you ever see the Onyx network from JP Morgan in like live action? I would love to see it.
I've never seen it. I mean, I've spoken to the Onyx team before. They're like it's their own private blockchain. I hate that.
Yeah, I know, but yeah. It does make sense for like their like settlement, whatever.
No, it does make sense. They shouldn't do it on a public blockchain. It makes sense. I wish it was on a public blockchain, because we all need the number to go up.
Yeah, I totally agree. No, I mean, yeah, nice. Awesome. Do you have any other like questions from maybe from the community, Tim, that you wanna ask?
Not yet. The problem now is that we are at 6 p.m. Belgium time, and that they used to watch at the late evening, because of that we had less more viewers than usual. But yeah.
So I can just fire away a few more questions then.
Yeah. What you like, Jerome? It's for me. I have a lot of interest how you fundamental analyze a token. What are the main factors when you look quick to a token, like the market cap, like circulating supply? What are the main things where an investor must watch to when he invests in a token?
That's a great question. It's also an impossible question to answer. But I think it's a large.
I mean, the token investing and the token unlocks is already a big plus. If you would have that data.
I think I agree. I think that's an important piece of it. The question is, are there fundamentals for crypto? And the reason fundamentals work is because enough people believe in something.
Yeah.
Right. The reason technical analysis works is because enough people trade off of technical. If no one traded off of technical analysis, it wouldn't work. But enough people trade off it, so it works, or some of it works. Right. And so the problem is there's no consensus in terms of how you value digital assets. And if fundamentals for everyone, if some people are looking at price to sales, if other people are looking at unlocks, other people are looking at this, that, or the other thing, it's hard to come to consensus. And I have a whole podcast actually that I host that I do occasionally. I'm really inconsistent, called the Fundamental Value Podcast. And I'll bring on VCs and hedge fund managers and others. And all we do is we speak about what are fundamentals for crypto. I don't think I've ever gotten the same answer twice. So, I've gotten similar-ish answers, but I think what are the things that I look at, right? So I'll tell you what I think should be the fundamentals for crypto. And I hope that we get there.
Okay.
I think that cryptos need to be thought of as like Series B growth equity style businesses. And with that said, the way that you view and you evaluate a late stage growth like SaaS tech business is you look at what is its retention rate, what is its churn rates, how many customers does it have, what is its customer concentration? In other words, is all of the revenue coming from one customer? If that's the case, the business is probably not worth anything. Or is it coming from 500 customers? You care about what is the lifetime value, what is the cost to acquire a customer, what are its gross margins? And we're actually the first company to build a lot of that data for crypto. So you can actually come onto our platform and you can look at how many users does Aave have? How many people are depositing or withdrawing liquidity? You can look at what is Aave's retention rate? So in other words, if 5,000 people used Aave in 1 month, what percentage came back after month 1, 2, 3, 4? And what I think is really important is in crypto, you have a large number of users that come and use protocols because of liquidity incentives, because they got an airdrop. Right? And that's one of the things that foundations, will do. Right. But I don't care that 50,000 people are using or have a wallet that holds this token if 99% of those users never did anything else in the protocol after that. And so we look at things as like how well a protocol is actually retaining its users. Are users coming back? What I want to understand, if a user is leaving Uniswap, are they going to Aave or Sushi, or are they going to SushiSwap or QuickSwap or something else, or are they leaving the chain? Because if they're just not using another protocol, that's actually better for Uniswap. That means they're just not engaging in crypto. But if Uniswap users were leaving and going to SushiSwap, that would be more of a risk, right? And so those are the types of things that I think we should be looking at which is actually what is the user behavior on chain?
Adoption, actually.
Tell us a lot about the customer and the customer behavior. And I don't think anybody is thinking about that.
No. I used to work in equity research, doing like these discounted cash flow models and all this kind of stuff back in COVID, actually. So it was an interesting time for me because the interest rates went up, so your average cost of capital goes up, blah blah. Okay, that's fine.
Yep.
Then I start to try to apply these kind of metrics onto the crypto space. I was like, how am I going to value this governance token? That's like. It's so hard, man. It's so hard. It's so hard.
And it also, look, part of it is Uniswap is worth a lot if Uniswap starts paying fees to token holders. Right now,
yes, indeed.
They don't want to because they don't want to be a security, right? And so it's also theoretically, like, if they turn the fee switch on, right? Like, for example, take OpenAI. They had no revenue. All of a sudden, they started charging $20 a month. Boom. You know, the company is generating, I don't know how many hundreds of millions of dollars.
Crazy stuff.
So it's the same thing, right? Like, if there's also kind of the theoretical, if they turn the fee switch on, right? And there's also like, there's so many things, right? And I think a similar related question is, why do prices of cryptos move? And there's so many reasons that they do. Yeah. Right? And as you would know, being at Q-Rock, right? Often the reason is, a token foundation just sold $40 million of their tokens, so the token price went down.
Yeah.
That's it. Like, sometimes it's just one person moving a large amount of assets moves the price. But what we try to do is, like, we're trying to give our clients as much information. And in some cases, we're overwhelming them with information because it's not just on-chain data. It's not just market data. It's not just sentiment data. It's not just news. It's so many different things.
Combination.
It's an unlock that happened that you didn't know about. It's all of a sudden early team members sold their tokens. It's a regulatory event happened in Belgium that no one in the US was aware of, right? That caused them, like, it's so many different things that could have an impact on the price of these assets. Hopefully we get to a point in time where there aren't as many hacks, there aren't as many bad things. So at least we eliminate the bad things from the quantification method. And then it's really about, you know, hey, how do we come to a reasonable, you know, because, like, Ethereum is obviously worth something. There's millions of people using Ethereum and building on top of it. How you value Ethereum, you know, comes down to how people think you should value Ethereum at the end.
Yeah, no, it's true. It's totally true. And Ethereum is a little bit better because it's actually a token that gets used to pay gas fees or whatever. I mean, that's already different than, and it can actually, like, keep up the network by validating transactions and whatsoever. But, like, full on, just like plain spot governance tokens, it's sometimes I really feel, I don't know.
Well, what I like to say is, if you can't build a business, launch a token, and if you can't launch a token, launch a utility token. I think utility tokens are the single dumbest thing. And, like, an example of that, and look, not all of them, but they're kind of like Chuck E. Cheese tokens, right? Chuck E. Cheese is an arcade in the US, right? As a kid, you buy the token, it's useless outside of Chuck E. Cheese, but you're just using it within the game, the thing. And I think there's a lot of that. There certainly has been a lot of that in bull markets in crypto. I think we're seeing significantly large, and that's not. And by the way, that if you can't run a business on a token is mostly a joke, because there are obviously, like, Ethereum shouldn't be a business; it should be a token, right? There's exceptions to the rule, but I think broadly speaking, if you have a question as to why there needs to be a token, you should not be holding the token, right? So I think talking about fundamentals, the first fundamental should be: does this business, like, if this business didn't have a token, would it be a business? And if the answer is no, and it's not a layer 1 or layer 2, generally I would stray away from being involved with it.
Yeah, no, 100% totally agree.
Joshua, when I hear you speak, you're very critical on how you value a token or a coin. Mentioned that, I think it's a good question to ask. What are your top coins for a safe investment? Certainly that you have within a few years that you can say, I have Bitcoin, I have Ripple, I have the Dino coins, or how do you say it? But I
don't like to give investment advice.
No.
And I think that anyone listening should take what I say with a grain of salt. Don't take it seriously. I am not the best investor or trader, which is why I'm building a company for servicing make money. With that said, I think it's incredibly difficult to know what's going to be successful in 4 or 5 years. I think clearly there's Bitcoin, right? And Bitcoin has its own narrative, its own use case, and Bitcoin is separate from everything else. I have a portion of my net worth in Bitcoin. I like Bitcoin and I believe in the mission of Bitcoin. I get it, right? I think Ethereum has clearly proven that is among the layer one race, the leading layer one that everything's going to be built on top of. I think with everything else, there's some range of question marks, right? As to what is going to work, what's not going to work. I think what you have to do is really look, if you believe in crypto, you have to put money in a number of different things. You don't just put money in one thing. Like I wouldn't say, okay, go out and, you mentioned Ripple, put all your money into Ripple. If you think Ripple is going to win the court case, certainly put some money into Ripple and play the trade of the court case. But like, if you think there's a chance that Ripple, and I'm not picking any favorite, it could be Ripple, it could be Avalanche, it could be Polygon, it could be
indeed.
L1s, right? Play the field, right? Pick the 5 or 10 L1s that you think have an opportunity, because I think it's hard. We haven't seen anybody really have that strong usage that Ethereum has had quite yet. And it's certainly not sustainably. We've seen people with temporary spikes in usage. And so my perspective is, look, figure out the sectors of the market you're in. If you think DeFi is going to take off, right? I think Uniswap has obviously cemented itself as the leading DeFi.
Yeah, indeed.
Everyone would agree. Even Uniswap competitors would agree with that, right? So like, look, if you believe in DeFi, you probably should put some money in Uniswap, but you should also play the field and put a little bit of money in everything else, right? I think, look, obviously you don't have as much upside when you play the field, but you also have a lot of downside protection. I think also look at the fully diluted valuations for some of these coins and just have a rational discussion with yourself and be like, this token's got a $10 billion FDV. If you're really looking for a 10x, do you think this is going to be worth $100 billion if it currently doesn't accrue any value to token holders? Right. So I think the important thing to keep in mind is just because something's down 90% doesn't mean it's not going to go down another 90%. So just be aware of it. We've seen it. It happens. Indeed. Right. So things aren't necessarily going to pop back up. But I think what you have to do is look, it's like, do I think blockchain gaming is going to be a thing? If I think blockchain gaming is going to be a thing, choose a couple of blockchain gaming projects and choose a couple of layer ones in the space. But I think, if you're trying to de-risk yourself, look, you invest in 20 things, at least 5 of those things are going to zero, right? You want to play the field and hopefully 5 of those things 10x, right? I mean, that's the whole venture capital model, right? Is you play the field, right? And,
when we speak about investing, we also not giving financial advice, but we say like Bitcoin and Ethereum is a safe place to invest in. If you want to take more risk, you must look at the narratives of the market, like you say, and then put it for your money, a small amount for a short term, and playing the narrative and buy and sell it within 6 or 3 months, but not holding it for 3 years or 4 years like Bitcoin and Ethereum. It's so much different, and you must also look when you're in a bear market, what is the strongest coin, what is the strongest project, and you can filter a lot more strong projects out than in a bull market, because in a bull market every coin goes like 20, 30 in a week. I think that's indeed a good explanation, Joshua. What you there?
I think in short, don't put more than you're willing to lose.
Yeah, indeed.
Look, I think it's very clear that crypto is here to stay, right? Which is awesome. The fact that the Citadel-backed exchange launched today, the fact that we have Fidelity coming out and launching Fidelity for Wealth Managers, which no one really noticed a couple of days ago, the fact that BlackRock is filing an ETF, the fact that Deutsche Bank is filing to offer crypto custody, whatever Gensler wants to do and whatever he thinks, he can go fuck himself because crypto is here to stay. But with that said, there's risk, right? And there's inherent risk, and don't put in more than you're willing to lose. And I think,
of course,
I don't think Bitcoin's going to zero. Obviously, not investment advice, but I wouldn't be running a crypto company if I thought Bitcoin was going to zero.
But I say always, Joshua, everywhere you have risk in life. In TradFi you have risk, in crypto you have risk, but you must manage it in the correct way. Your risk management is much higher in crypto than in TradFi, for example, because the volatility is a lot more. Jerome also knows that, and I think you must do your risk management. That's the only thing you must do.
Yeah, I think, look, if you want to make money in crypto, manage your risk. That's the number one best way to make money, right? It's stay on top of the market.
Thanks.
You know, get notified or figure out how to stay on top. Like, if you manage your downside, you will have the most upside, right? The reason most crypto companies have blown up is because they didn't manage their downside risk.
Okay. Jerome, do you have one last question from your side?
No, I mean, I think we can ramp it up.
Yeah. Okay.
I mean, one last question, maybe. You talked about diversification. If I can, like, you know, summarize it a bit. Diversification. Is it diversification across multiple L1s, or would you stick to?
I'm not giving any. I'm not even choosing. I'm not even going into that level of detail. I'm saying I would figure out the sectors of the market you're interested in. Right. So if you think L1 should accrue value, if you think DeFi should accrue value, gaming, figure out what areas of crypto you're most excited about and diversify within those areas. Right. Because you might say to yourself, look, L1 shouldn't accrue value. Right. I mean, that's a fundamental question. The FAT protocol thesis, does value accrue to the application of the protocol layer? Right. And that's for you to determine. I'm not making that decision for anybody. But with that said, find the sectors of the market that you think have the most opportunity. I personally think gaming is an interesting sector. I think like one thing that no one's talking about is there's a game built on Immutable X that's #1 in the App Store in multiple different countries right now. No one in crypto knows that. There's a game built on Immutable X that is the #1 game on App Stores in multiple different countries. That's really cool, right? Gaming doesn't need to be giant, you know, AAA games, though I think we will start to see some of those this year. You know, there are a number that are coming out, right? Like, I think gaming is a pretty interesting space. I think it makes sense. I think the gaming generation is a generation that likes crypto. Like, I think that, personal thought, I personally think that's an interesting area. I'm not an expert in it. I'm still learning more, right? But I think, like, if I'm like, okay, I like gaming, I'm not going to invest in one gaming token. I'll invest in 10 or 5 or whatever the amount is. And I don't know which one's going to work. And you don't know what they're going to be building 3 years from now, right? So you have to diversify. So I think find the areas of the market that you're interested in and diversify within those areas.
But you have a great point there, because gaming has also a lot of usability, user adoption, because they play the game and they get in the game and they buy and sell. I think that's indeed a good option to observe that sector. Yeah. Okay. Thanks, Joshua.
Yeah, thanks for having me on. This was fun. I appreciate it.
Yeah, it was very fun. We're gonna talk within 2 years maybe again, and then we have a bull market, and then
Yeah, by the way, so everyone knows, last time Tim brought me on, everything was great in crypto, and then it all went downhill. So either everything is going to go downhill further after this, or hopefully the next time we talk, the market's back to where it was the first time we did.
No financial advice.
No, all I'm saying is I guess I'm unlucky on your show. That's all I'm saying.
Yeah, it's great that you make time in this situation also, because you're growing fast. I follow you guys every day, actually. I follow your podcast. It's very great to hear and to see what you guys do. And yeah, it's an honor to have you here on the call, actually. Yeah, thank you.
Yeah, I appreciate it. I appreciate it. So thank you guys.
Okay, thanks, Joshua. Right. See you soon. Bye.
Ciao.